Hello friends, and welcome to today's video on the future of Berkshire Hathaway, one of the largest and most respected companies in the world. Have you ever wondered who could possibly fill in the shoes of Warren Buffett? With Buffett's succession plan in the spotlight, let's dive into who will lead this $900 billion conglomerate after Buffett and the late Charlie Munger. Stick around to find out more about these key players and their roles in shaping Berkshire Hathaway's future. Well, firstly, we have Greg Abel, the man said to be Berkshire Hathaway's next CEO. Abel's journey is quite inspiring. Born in Alberta to a working class family, he started his career in accounting before joining Mid-American Energy, which Berkshire later acquired in 1999. Abel quickly rose through the ranks, leading Berkshire Hathaway Energy and managing several of the company's non-insurance businesses like Precision Cast Parts and Lubrisol, as well as a massive rail transportation arm known as Burlington Northern Santa Freight Line, or BNSF for short. So the question is, what makes Abel stand out? Well, his knack for boosting operational performance and spotting valuable acquisition opportunities. This convinced Buffett that Abel was the best choice to succeed him, but Abel has big shoes to fill. Unlike Buffett, whose investment decisions were rarely questioned, Abel will have to navigate heavy scrutiny from the board and shareholders, which could slow down Berkshire Hathaway's capital allocation decisions. Plus, managing Berkshire's $130 billion plus in energy assets, which includes public utilities facing climate change risks and environmental, social, and governance concerns, will not be easy for Abel. Abel's rise is a testament to his operational excellence. At Mid-American Energy, he was known for implementing innovative energy solutions that significantly reduce costs while increasing efficiency. This reputation for operational prowess followed him to Berkshire Hathaway, where he continued to drive performance improvements across various business units. We now move on from the future CEO to the powerhouse of Berkshire's insurance operations. Now let's talk about Ajit Jain. Ajit Jain's story is equally impressive. Originally from India and a former McKinsey executive, Jain joined Berkshire in 1986 with no background in insurance. Fast forward to today, and he's the second most important person at the company after Buffett. Jain heads Berkshire's insurance division, which includes Heico, General Reinsurance, and Berkshire Hathaway Insurance. This division has been crucial to Berkshire's growth thanks to what's known as float, which is the insurance premium paid upfront by customers. If these premiums are underwritten well and invested wisely, they will generate significant profit. Under Jain's leadership, Berkshire's float has grown from $39 million in 1970 to about $169 billion in 2023. This massive balance sheet allows Berkshire to act as an insurer of last resort. Jain has worked closely with Buffett for decades, and the insurance division has been profitable for 18 of the last 20 years. But Jain, at 72, brings uncertainty about his successor, adding another layer of complexity to Berkshire's leadership transition. Jain's innovative approach transformed Geico into one of the most efficient insurers. His strategy of aggressive cost control and customer-focused service played a significant role in Geico's growth, making it one of Berkshire's most valuable assets. Now from Ajit Jain, let's shift our focus to the future stock pickers of Berkshire, Todd Combs and Ted Weschler. Todd Combs and Ted Weschler play pivotal roles in managing Berkshire's stock portfolio, overseeing $27 billion out of the $354 billion portfolio. Their performance over the past decade, while solid, hasn't outshone Buffett or the S&P 500. They delivered a total return of 113% compared to Berkshire's 165% and the S&P 500's 211% average. Their annualized gain stands at 8%, whereas Buffett achieved a gain of 10% and the S&P's annualized return is about 12%. Still, Combs and Weschler have made some notable investments. For example, one of them initiated an investment in Apple in 2016, starting with a $1.6 billion position, which has since tripled. Buffett followed this move, turning a $40 billion investment into $175 billion even after selling $16 billion worth of shares. Another successful bet was Divita, a dialysis maker where Berkshire now owns 41% of the $12 billion company. Combs also made strong plays on Visa and MasterCard, mirroring Buffett's historical investment in American Express. However, they've also faced setbacks too, with investments in Charter Communications, Liberty Media, and Paramount Global not performing as well as some of their other investments. Their average holding period of 2 years and 10 months is much shorter than Buffett's 4 years and 3 months holding period, reflecting a different investment style. Despite this, Buffett has praised their contributions, saying both Todd and Ted have been invaluable to Berkshire and significantly benefited shareholders. Combs and Weschler's distinct paths to Berkshire are also worth noting. Combs joined in 2010 after a cold call to Charlie Munger, whilst Weschler joined in 2012 after winning charity lunches with Buffett, totaling $5.3 million. These stories highlight the diverse ways talent can enter the company, from cold outreach to significant financial commitments. Weschler's successful bet on DaVita stemmed from his personal interest in healthcare. His in-depth research and understanding of the dialysis industry allowed him to see long-term potential in DaVita, which has paid off handsomely for Berkshire. So as we look ahead, the challenges that Berkshire faces in this leadership transition are significant. As Berkshire navigates this transition, several challenges will lie ahead. Greg Abel's ability to maintain Buffett's investment philosophy under increased scrutiny and Ajit Jain's pending succession are critical. Additionally, Todd Combs and Ted Weschler need to consistently deliver strong returns to sustain Berkshire's financial strength. The company's success will depend on their ability to manage the massive insurance float and continuously grow the cash pile, currently sitting at over $180 billion. Furthermore, Berkshire's future hinges on its adaptability to changing market conditions and regulatory environments. Abel will need to address climate change risks and ESG concerns, especially within the energy sector. Jane's successor will have to contribute to the profitable management of the insurance division while navigating new challenges within the insurance industry. The future of Berkshire Hathaway is at a pivotal point, with Greg Abel set to take over as the CEO, Ajit Jain continuing to lead the insurance division, and Todd Combs and Ted Weschler managing the stock portfolio. The company is in capable hands. However, the challenges they face are significant, and their ability to navigate these will determine Berkshire's continued success. Thank you for joining us as we explored the future of Berkshire Hathaway. The company's transition from Buffett's leadership is a crucial moment. Stay tuned for more updates on this and other financial insights. Don't forget to like, subscribe, and hit the notification bell for more such content. Also, we'd love to hear your thoughts and the prediction about Berkshire's future. What do you think about Greg Abel's ability to fill Buffett's shoes as the next CEO? Let us know your thoughts in the comment section below. Stay safe, and I'll see you all in the next video. Bye for now.